Hi friends, good day. Today I'm taking out exercise number 3. Amal and Bimal are in partnership. Their balance sheet as under on 31st March 2016 when the firm was dissolved. Liabilities Kratos 4800, Amal's capital 750, plant and machinery 2500, furniture 500, debtors 1000, stock 800, cash 200. Here without having Bimal capital we are having Bimal drawings. What do you mean by this? That means it shows capital account is showing which balance? A debit balance. Bimal capital account is showing debit balance. Clear to all of you? Then next, so this drawings account we can close by transferring to Bimal capital. Because when you want to make a payment, this drawings account can be closed by transferring to capital account. Then we can continue the problem. Assets realized as under plant and machinery 1250, furniture 150, debtors 400, stock 500. The expenses of realization amounted to 175 rupees. Amal's private asset is not sufficient even to pay his private debts, whereas Bimal's private assets has surplus of 200 only. Show necessary ledger accounts to close the books of the firm. Now, when he is talking about private assets, why he is talking about private assets? And that too, um, Amal's private estate is sorry. Amal's private estate, not asset here. Sorry, Amal's private estate is not sufficient even to pay his private debts, whereas Bimal's private estate has a surplus of rupees 200 only. That means Amal doesn't have any private assets. Private estate is nothing but private asset. We talk about private estate or asset. Estate will be converted into like asset. You can sometimes use the asset word or estate. It is having same meaning. So private estate is not sufficient even to pay his private debts. That means private properties are insufficient to pay private debts. So there is no question of bringing any cash to that. Whereas Bimal private estate has a surplus of 200 rupees. That means after meeting his personal liabilities. So here I would like to tell you one thing. Whenever a partner capital account is showing debit balance, when he needs to bring some cash to the firm, then he has to bring the cash. If he is unable to bring the cash, and he has to, like, that unlimited liability, the main feature of partnership along with sole proprietary concern is that the liability of the partner is unlimited. Unlimited means even they need to bring their personal properties to pay firm liabilities or his share towards firm liabilities. Now, in this case, he is saying that Amal's private estate is not sufficient even to pay his private debts. Means whenever you are going to bring your private assets or private estate into business by selling the private properties, first you need to clear off your private liabilities, personal liabilities. After clearing of the personal liabilities, then that amount, sufficient amount, that amount, surplus amount, can be used towards his share of amount that he needs to bring towards uh, settling the account with partnership firm. So that is what you should understand. First, private assets must be used to pay private liabilities. After clearing the private liabilities, if surplus is there, that amount can be brought in by the partner. Then why this information has been given? And he has not mentioned that any partner has become insolvent like that. Then we do one thing, why this information has been given. We cross check by taking the total of these four assets. Let me take this. Plant 1250 plus 150 plus 400 plus 500. You add, the total of this is coming to 2300. And what is cash here? 200 cash. By selling the assets is getting 2300, opening cash balance 2500. And expense of realization 175. So 2325 is the amount that is available for making the payment towards liabilities, whereas creditors is outside liabilities 4800. Right, understand? Now, by realization of assets, including cash balance after meeting realization expenses, after meeting realization expenses amounts to 2,325. This 2,325 is not sufficient to pay amount due to creditors. Okay, then since business assets are insufficient to pay outside liabilities, partners are supposed to bring uh, by selling their personal assets and by clearing off their personal liabilities, they need to bring the cash. Amal private estate is not sufficient even to pay his private debt, so Amal can't bring anything. Whereas Bimal's private estate has surplus of 200 only. Okay, you add 200, it is coming to 2,520. So this amount is not sufficient to make payment to creditors. Then we can say firm has become insolvent. At all of you, like this we should know. Then how, when you will be knowing, they'll generally they will be giving a hint to you. This is very rarely this problem they will be picking up. Suddenly you may get these kind of problems as a short question in the examination also. So please watchful. This is normally you will be looking at Ganos Murray case, but surprisingly the examination you can expect these kind of problems also. So today we are discussing, the problem is about when all partners have become insolvent. All partners have become insolvent is the this particular problem. So now, sir, what is to be done, sir, in this case? Here, plant and machinery, will be transferred to realization account debit side. Furniture realization account debit side. Debtors realization account debit side. Stock realization account debit side. Of course, cash account you will be opening. Bimal drawing transfer to Bimal's capital. Is indirectly saying that Bimal's capital is nil. In fact, drawings is dominating, means Bimal's drawings is debit balance is nothing but Bimal's capital is debit balance, because Bimal drawings account you can close by transfer to Bimal capital, opening Bimal capital. Now, please remember, before, whenever you got a hint like this, you cross check the total of assets realized plus including cash balance minus expenses, then you compare with the outside liabilities. If the amount is insufficient, then you add private assets brought in by the surplus from private assets brought in by the partners. Then you cross check. Now the same thing I have done. This is 200 is cash balance, 2,300 is assets realized, 175 is realization expenses, 200 repeat private asset brought by the surplus from private assets bought by one of the partner. Other partner he couldn't bring it. So 2,525. This is not sufficient to make creditors 4,800. So we can say firm has become insolvent. Now, in such case, don't transfer creditors to realization. Please try to understand. Don't transfer creditors to realization. The reason is that we don't know how much amount we can make payment to creditors. So that can be known only after opening which account? Cash account. So the normal, previously we used to do balance in cash account is equal to amount due to partners. But in this case, since the amount doesn't, partners is unable to bring, their capital accounts are showing debit balance, so you can't make payment unless you know what is the cash balance. That is why creditors account will not be transferred to which account? Realization account. Get all of you? When all partners have become insolvent, don't transfer outside liabilities. Here we are having only creditors, not only creditors, any outside liability also can't transfer to realization account. This is one point you should remember. So we work out doing this. So what are the accounts we need to open, sir? Realization account, you know that. Cash account, you know that. Additional account, partners capital account, you know that. Additional account which you need to open, creditors. Then the amount that partners is unable to bring will show debit balance. So in this case, Amal's capital account is also going to show debit balance. Bimal capital account is also going to show debit balance. Then what happened finally? The amount that can't be brought in by the partner is called as deficiency. So after opening capital account, that deficiency account is closed by transferring to, okay, the balance of the deficiency account, which is, the balance of amount that partners unable to bring after opening partners capital account. What are the debit balance which partners is unable to bring must be equal to deficiency. So what is deficiency accounts? Are the amount that we can't make payment to creditors is called as deficiency. The deficiency account, that balance which you'll be getting by opening creditors account must be equal to deficiency, mean the amount that is to be brought by the partners must be equal. Then the problem is correct. So that I'll be going to explain by working out the problem. So let me open first account. The caption is, I've told you already, and all partners are insolvent and all partners are insolvent and dissolution. All partners are insolvent and dissolution of the firm. Okay. First, let me open realization account. Then open Creditas account. Deficiency. So these are the accounts which we need to open. Okay. The first account which we need to open is realization. Second account which we need to open is partners capital account. Third account, cash account. Fourth account is Creditas account. Account is deficiency. So 5 accounts we have opened. Now, first, as usual, plant and machinery will be transferred to which account? Realization account. So 1500, furniture 500, debtors 1000, stock 800, then cash account we have opened already 200. Bimal's drawings will be transferred to Bimal Capital. It's 550. Creditas, I told you don't transfer to realization account. We have opened Creditas account. Buy balance brought down 4800. Buy balance brought down 4800. Then Amal's capital account 750. Trade balance. Then next, the assets realized. We got plant and machinery. Here I am writing on the relation account credit side. By cash, at values 1250, 150. Plant and machinery 1250. Furniture 150. Debtors 400. Stock 500. Right, inner column we can write the total, then we need not again write the total. Same thing again. 1250, 50, 400, 500. It is coming to it is coming to 2300 rupees. Okay, this will be debited to which account? Cash account. Assets realized. Okay, this is completed. Now then we got next one, Kratos. I told you we have already opened that account. Expenses of realization amount to 170. So by realization expenses 175. Then Bimal private listed as surplus of 200. He brought 200 rupees. No, that also I'm writing. What is the entry for that, sir? Cash account data to Bimal capital. So here to Bimal. So Bimal capital to. So now this is completed. Then show the necessary ledger account. The entire posting has been completed now. Cash realization. Okay. Now what we can do first, we can close as usual. We can close the realization account. Then we can come back to closing of all other accounts. Realization account I am closing here. Obviously debit side total will be more. 2500 plus 500. See, for Gan vs Murray cases applicable, only one partner has become insolvent. Here in this case the entire firm has become insolvent. So you don't have any, no need to apply anything. 4975 minus 2300, 2675 by will be transferred to Amal capital Vimal Cap. 2675 is the ratio given in the problem. Don't have, I think, any information whatsoever about the ratio. Then when it is mentioned, we can distribute the loss equally. There is no agreement, you know that partners, there is no agreement among sharing of profit and losses. It will be shared equally by the partners. 1675, 1338 and 1337 we can. Okay, 1 rupee we are adjusting. The writing change, we are rounding off. This is loss. Now this will be debited to partners capital account. To realization account. To realization account loss. 1338, 1337. Realization account has been closed. Now what we can do, we can close the cash account. The reason is that we need to make a payment to Creditas. No, unless you know what is the amount you is available for making a payment to Creditas, we can't close Creditas account. $2,525 is a cash balance which is available. The 2,525 cash balance which is available will be paid to Creditas. Okay. So here by Creditas. Balance amount paid. Now we can go to Creditas account. Creditas account we can write to cash. You are supposed to pay 4,800, but you are able to pay only 2,525. The balance amount that you are unable to pay is transferred to which account? Deficiency account. Deficiency. This is what the deficiency 2,275. So now this deficiency account, whatever we are having, must be equal to the amount that partners were unable to bring. And some people, they say that this 2,275 will be transferred according to profit sharing ratio. So don't do that. Be watchful. Be watchful. Balance in Creditas account will not be transferred to balance in Creditas account. I mean the unpaid amount to Creditas won't be transferred to partners capital according to their profit sharing ratio. Simply you transfer this to deficiency. Now in deficiency account, you write by Creditas. Entries Creditas to deficiency. No, deficiency you will be writing by Creditas. Excuse by Creditas. Deficiency account 2,275. Now this deficiency account will be closed after closing the partners capital account. So partners capital account, let me close. Think in this case, partners capital account is showing debit balance 1338. 1338 minus 750 is coming to 588. This is what he's supposed to bring, but he's unable to bring this. This is what we will be transferring to deficiency account. Then there is no question of transferring that in profit sharing ratio. If you transfer again, you may get further deficiency. Be watchful. I think explanation has to be very clear there. 1337 plus 550. 1887. 1887 minus 200 is coming to 1687. That this is what they are supposed to bring. Because they are unable to bring this amount, it has become deficiency. If you want, you can check, cross check. 588 plus 1687 is equal to 2275. That amount we could not pay, able to make payment to creditors. Now deficiency account entry, what is that I have written here? Deficiency account at to partners capital account. In deficiency account, I'll be writing to Amal capital, ₹588, to Bimal capital 1687. To Bimal capital 1687. Clear to all of you? So I repeat once again. First, you close which account? Creditors account. The balance in creditors account is transferred to deficiency account. And the balance in partners capital account must be equal to deficiency. That's it. That's it. So this is how you need to work out the problem. So all the accounts have been now closed. Surprisingly, you may get a like a short question, like 8 marks question. It can't be a lengthy question, or you can expect these as a short questions. So here I would like to, whatever I have explained you, few points I wish to write here so that you can have a reference here. This is like a note. When all partners became insolvent, it is better not to transfer amount of creditors to realization account. And next point. Creditors will be paid with available balance. Creditors will be paid with available balance. Including amount contributed by the partners. That is what 200 rupees they brought no Bimal, including the amount contributed by the partners. The unsatisfied portion of creditors is to be transferred to deficiency account. Last point. The deficiency, we can say, the amount that is not brought in by the partners, must be equal to deficiency, deficiency amount. Now, partner's capital account debit balance that is not brought by the partners the amount that is not brought in by the partner must be equal to deficient. Now, partner's capital debit balance that is not brought by the partners will be closed by transferring to deficiency. Now, deficiency account is also closed. Now, deficiency account is also closed. Deficiency account is also closed. It's all about your few points which you should learn. The amount that is not brought in by the partners must be equal to deficiency account. Now, partners capital debit balance that is not brought by the partners will be closed by transfer to deficiency account. Now, deficiency account is also closed. In these 3 points you should remember. I've already explained you. So we got one more problem of this nature. I think that you can see we got only 2 models. At yesterday's class, I've given you 2 problems homework. I think you might have done that. This one. A and B are partners showing profits as sharing. That is showing, not showing. This is sharing. Sharing profits and loss in the ratio of 3:2. Their balance sheet on 31st March 2004 was Sundry creditors 63,600, B's loan 10,000, A's capital 12,500, B's capital 9,000, fixed assets 20,950, stock 42,490, debtors 11,460, cash 200, P&L account. This is undistributed loss. We work out this one also will be practice for you. Assets realized, fixed assets, stock, debtors. Realization expense amount to 3,390. Private assets 5,000, private liabilities 3,000, B 3,000, 9,000. Prepare the necessary account to dissolve the firm. Again, this is also same model, but the thing is that you are having one. In the last class, I have given you treatment of loan. Generally, partners loan will be amount due to partners loan won't be transferred to realization account. It will be transferred to realization account only when firm has been sold to a company or to another firm. Including all, when they take all liabilities, they take all liabilities including partners loan, then only the loan account will be transferred to realization account. Otherwise, loan account will not be transferred to realization account. That I've already explained you. We are having that particular example also, that particular incident also in one problem we discussed there. Now the question is that this problem is, I told you, we have seen like previous one. Here also, when all partners have become insolvent. So when all partners have become insolvent, I know how we were able to know that. That also we can cross check once again. So this B's loan 10,000 rupees now will be transferred to B's capital, because when all partners have become insolvent means they owe the money to the partnership firm. Now B's loan means amount due to B. When B can't bring, how can we make payment? So that is why whatever the amount due to partner is like a mutual owing. We need to pay you, you need to pay to firm. So instead of you making payment, I making payment. to you that we can adjust by transferring B's loan to where B's capital. So that what happened, the amount that is supposed to be brought in by B will be reduced. So that is the reason why when entire firm has become insolvent, I've clearly mentioned a note. Again, I'll be writing note here. B's loan will not be transferred to realization account, or it will not be transferred even to cash account, because the reason is that all partners have become insolvent. We also can cross check the way we have done. Just I'm giving 2 minutes time. Can you quickly take the calculator? Can you see whether what my statement is right or wrong? My statement is right or wrong? Read the problem for yourself. Make a quick decision. How to know when all partners are insolvent? Okay. So I think by this time you might have done this. See, cash balance 200. Fixed assets, we are having 3 assets. These 3 assets, if you realize, 6,200 plus 30,800 plus 8,300. It is coming to 45,300. And what is opening cash balance? 200. If you see, it is coming to 45,500. 45,500 is the amount that is available for making the payment. But what is creditors? 63,600. Okay. That too. First you need to pay relation expense 3,390. Okay. So after paying 3,390, the amount is not sufficient to pay to creditors. That means the firm has become insolvent. Now let us see what the partners can do. A private assets 5,000, A private liabilities 3,000. So as I told you, when partners are bringing their private assets, first they need to use that amount for making their private liabilities. So private assets minus private liabilities surplus is how much? 2,000. As far as B position is worst, if you give, he will be ready to take, because you look at his private assets 3,000, private liabilities 9,000. So he can't bring, no surplus. His private assets are not sufficient to pay his private liabilities. So where is the question of bringing private assets to clear the amount which is due by him to partnership firm? So only surplus is 2,000. So B can't bring anything. So 45,500 plus 2,000, it is coming to 47,500. This is your assets available. But what is the amount that is paid to be paid to creditors? 63,600. Now tell me, all partners are insolvent or not? Same procedure. Only thing is, why I have taken is that we are having undistributed losses and B's loan. Please remember, this is a different problem. That is why I'm going to work out this, right? So let me open like a previous problem. I'm opening again first account. This is problem number 8, no? Page number 27. Okay. So first let me open. Second account. We need to open partners capital account. A and B. Third account which I need to open is, as I told you, cash account, then Creditas account, deficiency. To fixed assets 20,950. To stock 42,490. To debtors 11,460. Cash account 200. To balance brought down 200. Then P&L account is undistributed losses. It will be transferred to all partners capital account according to their profit sharing ratio 3:2. 20,000 will be transferred according to their profit sharing ratio. It is coming to 12,000 and 8,000. Undistributed loss. Okay. Creditas 63,600. Creditas account I've already opened. I've given the reason also. Buy balance brought down 63,600. B's loan, I've told you that B's loan, since all partners have become insolvent, firm is not in a position to make payment to Creditas. Without making payment to Creditas, how can you make payment to B? So what the firm will be doing in such case, this is a point I've explained you. Be watchful, be careful. When all partners have become insolvent, part loan which is appearing on the liability side will be closed by transferring to partners capital. Even loan which is appearing on the asset side also will be transferred to partners capital account. That we have already learned. Partners loan appearing on the asset side means loan is given by the firm to the partner, that also to be transferred to capital account. Now in this case, partners loan which is appearing on the liability side, partners loan appearing on the asset side means partner owes money to the firm. Partners loan appearing on the liability side means firm partner owes money to the partnership firm. Are you able to understand? Partner's loan appearing on the liabilities side means due to firm. If same B's loan is appearing on the asset side, due this is due by firm, sorry. Due by firm. Due by firm. Due to firm by partner. Suppose same B's loan appearing here, for example, say 10,000. Suppose say 10,000. This will become due from partner to firm. Normally, this you know that we have already learned. This will be transferred to where? Balance sheet, partner's capital account, debit side. But this amount, for the first time, we are seeing that this will be transferred to which account? Partner's capital account. Generally, we won't transfer to partner's capital account. It will be transferred to cash account. But since all partners have become insolvent, B's loan will be transferred to which account? Partner's capital account. So what is the entry now? B's loan is showing credit balance. Now to close that, entry will be writing is B's loan to B's capital. B's loan to B's capital. So now in B's capital, we'll be writing by B's loan. I'm leaving some space here. By B's loan is how much? 10,000. Why I'm leaving some space? Because we are having some balances. Now A's capital 12,500, B's capital 9,000. By balance brought down 12,500. 9,000. Clear to all of you? Now, then this is completed. Then we can go for realization of assets. By cash. Fixed assets 6,200. Stock 30,800. Debtors 8,300. $45,300. Okay. So it is coming to 45,300. I have already written. Right. Then next one, in cash account, I must write this one. To realization account. Assets realized 45,300. Okay. Then let us move on to relation expenses entry. 3,390. Okay. Then that I have to write where in realization account. To cash. Realization expenses 3,390. Okay. Then this has been completed. Here surplus brought in by A is how much? 2,000. By cash, A has brought 2,000, B hasn't brought anything. Okay. Now in cash account I should write to A 2,000. Amount brought by A. Now after completion of this, We can close first which account? Realization account can be closed. So 20,950 plus 42,490 plus 11,460 plus 3,390, 78,000. Minus 45,300. So we are getting a balance of 32,000. 32,990. The 32,990 is a loss. This will be transferred to A, B. According to their profit sharing ratio, I think that is 3:2. Yes. So 32 19,794. Okay. It is coming to 13,196. This is a loss. So this loss will be transferred to A and B. Now here, to realization, loss transferred. A 19,794, B 13,196. Okay. Now this, let us wait there for a while. We'll come back to cash account. Now what is the cash balance that is available? Let us see. So 200 plus 45,300 plus 2,000, it is coming to 47,500. 47,500 minus 3,390, it is coming to 44,110. The 44,110 is finally the balance which is available that we can make payment to Creditas. By Creditas account, balance amount paid to Creditas. This is balance amount. Please remember, balance amount. We don't have any other it's not like the amount which is due to Creditas. Actually, the balance amount, available balance amount. I can write available. Better let me write this one. Available balance. Available balance. Available cash balance. Paid to Creditas 44,110. Now in Creditas to cash 44,110. 110. So 63,600 minus 44,110. It is coming to 19,490. This 19,490 is nothing but transferred to deficiency account. Clear to all of you? Deficiency account. This is balancing figure. This we can't pay. Now this Creditas account has been closed now. Creditas account has been closed now. Now this deficiency, since Creditas to deficiency or written in deficiency by Creditas, this is the amount that is unpaid to Creditas, must be equal to the amount that is not brought in by the partner. This amount is equal to amount not brought in by the partner, that we need to cross check. Now obviously A's capital account, B's capital account is showing debit balance. So 12,000 plus 19,794 is equal to 31,794. 31,794 minus 12,500 minus 2,000. It is coming to 17,294. So here I am writing by deficiency. This is balancing figure. Similarly, we can do 8,000 plus 13,196. It is coming to 21,196. 21,196 minus minus 19,000. 2,196 is supposed to bring 2,196, but is unable to bring. Why this amount is reduced? Because the amount that is due by the firm to partner has been adjusted. That is why otherwise this amount could have been 12,196. Okay. Now, actually is supposed to bring 12,196. Firm is supposed to pay 10,000. See, if you don't transfer BIS loan, what happened? He is supposed to bring 12,196. Firm is supposed to pay 10,000. That means finally how much he has to bring? 2,196. Okay. So now we need to cross check whether that is right or wrong. By deficiency account I have written over here. The amount that is not brought by the partners is transferred to deficiency account. To Ace Capital, to BIS Capital. Here some people, when you are in a hurry, you may transfer the deficiency account balance. The account is a profit sharing ratio. Don't transfer. So you'll be having confusion. Listen to me. Partnership accounts, there are so many ways you can do, my dear friends. I'll be telling you advanced stages what happened. The way of working the problem is different. Don't confuse. It's the simplest way. Okay, the simplest way. Let me without telling anything, let me share myself. My experience on partnership accounts, almost maybe 60 more than 70 to 80 times I taught for the CA people partnership accounts. So I know various kinds. I've done a lot of, luckily people haven't had the advanced issues in group 1 partnership. Group 1 means whatever you learned in foundation. High-end problems were there in partnership. Every batch students used to struggle in partnership account. I've done I've done a bit of research on that, how to make the things convenient and easy for the students to follow. So as far as my explanation is concerned, I want to follow consistency, so that first you should understand the problem you practice on. Don't look at the solution. This I told you in foundation also, I told you in group 1 also. Whatever I am saying, first listen to that. You be practice. You have some confidence on that, sir. What the sir has explained, what I have learned. After having clarity, then you can go and you can see how they have worked out. Otherwise, if you directly this problem whatever sir has explained is there on the in the study material also, let me try, then sir why he has done like that, you'll be having all apprehensions. So please listen to me here. Sometimes you see, when I'm solving the problem, which is different, solving the problem according to my convenience, my way of solving the problem, your way of solving the problem is sometimes different. I've seen when you go for, I used to watch your CA foundation scripts. Inter, I think I haven't watched much, but CA foundation, I remember you people used to write examination, different ways we used to present, but ultimately that is for you to present. Okay, no issue, you can do the one way, the other way, ultimately you should get the answer. But when I'm explaining, I can't explain the way that has been worked out. Okay, otherwise I'll be unnecessarily creating a confusion to you, that like you can do like this, you can do like that. First, if you are good in it, then we can go for improvisation, like I've been adding here and there. Some others they do like that in Gan versus Murray case. First, like after explaining that, I started telling that this is also the other way of doing the things. So partnership accounts particularly, I'm telling you, no other chapter. Partnership accounts particularly, either it was previously in group 1 or group 2, now it is in foundation. So foundation, they are not touching into the depth of it, luckily. But advanced accounting, group 2 partnership, you can expect a different variety of problems. The presentation is a different way they do that. Okay, sometimes they don't open deficiency account. Don't panic. Deficiency account is for us to have clarity. Excuse me. For us to have a clarity, the deficiency account why has opened. So they are not open deficiency. Directly they might have gone for direct entry. So these things you must be watchful. Okay. So please practice, please practice, please practice. Okay. Now deficiency account, Ace Capital, what is the balance we are having here? 17,294. 17,294. Then next one is 2,196. Twenty thousand two ninety four. Yeah, it is tally. So all accounts have been closed. So here I have already explained you in the last class why I have taken up this problem is about the important point in this is since all partners have become insolvent, is transferred to B's capital account. Clear to all of you? Otherwise, generally, B's loan won't be transferred to B's loan won't be transferred to B's capital liability side. Asset side we transfer, but this is what is important point in this case. Okay, and B's loan, of course, we never transfer realization account, but in one situation we transfer B's loan appearing the liabilities to realization account when B's loan also taken by the purchasing company or purchasing firm. That when situation comes, I'll explain. Okay, I think these two problems will give you a clarity. These two problems, same heading, when all partners have become insolvent. With this, first part is completed. Now, second part will be moving into conversion of a firm into a company or sale of a firm to a company or another firm. I think that is very important from the examination point of view. Last time a question came in the examination from that, and that there they'll be after floating of a company, they'll be asking you to open the balance sheet. Okay, they'll be asking you to open balance sheet. I think you are good in it, and company balance sheet is a key for three chapters particularly. Partnership accounts in conversion of a firm into company or sale to a company, and also amalgamation of companies you need a balance sheet, and internal reconstruction. In these three cases you need to be having clarity of company balance sheet. We have had detailed discussion in group 1. Okay, my dear friends, so we continue our discussion in the next class. I hope you all are following this. If you are having any queries, you can send your feedback so that I can address those issues in the classes or through message or something like that. I can do it. So keep on practicing, have confidence. So only thing is, don't frighten about the chapter. So many things, of course there are so many um, important points you should remember in this 4 chapters. If you pay attention, this partnership, uh, amalgamation of companies, internal reconstruction, and bank accounts, 4. And liquidation of companies is simple. It's not that an issue, you can easily do it. Only these 4 chapters is scoring. Group 2, luckily accounting standard plays a major role, but generally problems part other than accounting standard you can easily score mark. You don't have that much syllabus when compared to group 1. Okay, having said, you need to practice a lot, and there are some other small topics that you easily learn. Okay, we'll meet in the next class. Till then, goodbye. Thank you. God bless you all the account. Okay, friends, we'll meet in the next class. Till then, goodbye.